how that's happening. One other point in macroeconomics, I would say gold. We talked about gold, and gold is looking pretty good. You're looking at this chart is starting to, you see this move between, again, let's do a little bit bigger here. Sorry. Just want you to see a bigger view of gold over, let's say, 2 years. Okay. So now we have 2 years, and we're going to do, all right. So we've talked about this before. Stock has a huge move. This is COVID, okay? And then GLD, gold, price of gold is going up. This is a 1 year long process, 1.5 year long process. And since that high, it's been basically coming straight down. Okay, we can look at this, if you will, almost like a channel here. See that channel? Okay, coming down. And what's happening here is it's found this level, 157. You could see that, which is interesting, right? Low here, right? And if you just go back, there's something going on at 157.5. I don't know what, but there's something going on at 157.5, right? You got it here, 3, 4, 5, 6, comes back, and now we're back at it again. Okay, 157.5. It bounces here, and now it recaptures the 50. So this is positive, right? The 50-day, you see over here is where we are with a lot of the names that I just showed you, right? The NEOs, the Lees, the XPVs, all of these big names where this was a huge ramp, and this 50-day is starting to collapse towards the 200-day. For sometimes when it breaks, that's no good, and then you're going to take the brunt of it here, okay? And now the 50 days kind of move the opposite way where it's different. That means this 200-day is rolling over. See how the red line is kind of rolling over here?
Yep.
Okay, so we don't want that to roll over. So gold needs to start catching a bid in order to kind of stay flat. And then it'll, with time, it'll kind of dip a little bit. And then you want it to keep on going up. Okay, this rolling over is no good, puts long-term pressure on the thing. But you have here the difference between the 50-day and the moving average here is negative, as opposed to here it was positive. And now you have the stock sort of trading a little bit better after this bounce. I'm going to show you one other thing here. So looking at, by the way, I just go back to the same things every time just because I know, but if you have technical analysis skills in different areas or much better than me, then that's great. That's, it's part of the game, but I just like to look at it simple. And I've shown you this MACD for turns. I look at these for turns. And so it tells me here, MACD down. Okay. And here, MACD, you're looking at the MACD. Let's look at it here. Okay, so price down, MACD makes a low. Price lower, MACD makes a price lower. Price even lower, MACD makes a price lower. Price kind of hits that low again. We're real close, and you see that the MACD is now actually going up here. So that's a positive development as well, and it's trading well today above, we're talking about near term above this sort of, call it 164 range. So you want to see it hold, and maybe you get a move to 170 in gold, 172 over the next, could be quick, could be over the next, 2 weeks, 2 weeks, where you just go bam right to 170, 172. We are long and have been long. Try to be long some gold all the time, or at least when we see things that are moving up. But we're long Newmont, and you see here Newmont is trading well. This looks like a, gold trades 170. Newmont's gonna have a run here. So you see that trend.
Yep.
You see that right there, and you see it's broken here, right there. It just broke through. That's a positive development. Now, what you might want to watch is depending on where gold goes. If it goes higher, we think it could trade, something like 70 to 75 range, up to the 75 range up here. Okay, so that's what we're kind of looking for. But you got to pay attention here. It could go to, the way these things generally goes, it goes to like 66, comes back down to this line, 63, 62, and then shoots up a lot of times. Or if gold just takes up, it's just going to go up here. But again, another way to get your levels, we're looking at 54 and 63.5. So that's 9.5. 9.5 plus 9.5 gets you a near-term look at what? 69.
Yep.
See that? 69 gets to 69. Maybe it stops. It's right around this high. But we're looking, there were call buyers thinking, when we got into this name, this call buyer's thinking up to 75 in this name.
Right.
Okay.
Nice.
Good.
Nice. Awesome.
2:01, man, on the dot. We'll catch everybody tomorrow. Peter Schiff. Somebody wrote Peter Schiff. Yeah, that's the guy, Peter Schiff. He's got a million YouTube things online. I like listening to him. The guy makes sense. He's, like I said, he's a little bit on this side. Okay, maybe a lot on this side. He's always saying the world's going to end, but just listen to his logic and then make sure you, before leaving, don't go to bed watching Peter Schiff. Before leaving, go back to CNBC and read something that's like very positive in the world. Or put on, happy and good, because Peter Schiff will tell you, I mean, he's going to want you to buy a bomb shelter, you know, in your back, put that in your backyard. That's how he's very doomsday. So, so be careful. You don't want to get caught in that trap.
Cool.
All right, guys. All right. Be good.
Good episode. Thank you, Felix. We'll see you all next week. Have a good one.
Bye-bye.